Welcome back, you lovely people. In today's video, we're going to talk about why Bitcoin is going to an all-time high very soon, going to $100,000 after that, and then going up to $300,000 by the end of the year. And I just want to start by having a look at the price action today. We're up 2.5%, and we're recovering nicely from the capitulation. It's looking more and more likely that that was the bottom of the sell-off after channel 1 and that we're beginning channel 2. We will be able to say with a lot more confidence when we break this trend line. But if we close above this resistance we have in here, about where we are at the moment, if we have a strong end to the day, close around here, then it's looking more likely than not. And there is some news that has spurred us on today, given us a kick up the arse. And this is our first reason why we're going so high before the end of the year. And that is adoption for payments. And we've had the news today from Jack at Twitter. They are rolling out imminently the ability to pay and tip through Bitcoin and through the Lightning Network on Twitter, which is massive, massive news. Twitter, of course, being one of the primary social media platforms integrating with Bitcoin, integrating with Lightning. Side note, they're also doing some NFT authentication. I don't know exactly what that means, and we probably won't know until we see it. But I do have a video of the tipping service. It's through the Strike network, so it's also Jack Mallers who is responsible for this, also doing amazing things, the two Jacks. And therefore, we're not going to have it in the UK yet, which is a shame, but it's in the US, which is the biggest audience. This is a video from Dylan Leclerc, who has screen captured sending a tip to Jack Mallers. I'll just play it. It's only 13 seconds. I love how they are measuring the tip in sats. There's been a lot of, there's been a push from certain crowds to start pricing Bitcoin in sats, because sometimes we do get punished by the high price. People don't understand that they should be judging the project on market cap rather than the price of the token, which of course means very little. So also fantastic to see that being done in sats and going out soon to the whole world. And of course, when you combine that with what's going on with the likes of Visa and MasterCard and PayPal, this means we're seeing a very big leap move from Bitcoin as a store of value to a medium of exchange. And this is probably happening quicker than expected. Of course, we've got El Salvador now, nearly 2 million Lightning wallets across the El Salvador population. This going out on Twitter, I mean, this is really going to, this is a snowball effect, and it's happening right now before our very eyes. So that's reason number one. Reason number two, the on-chain metrics. I'm just showing you one taster here of many, but if you look across the on-chain metrics, follow Alan Au or William Clemente on Twitter. This is the Bitcoin balance on exchanges. You can see the orange line, which is a low for this year. And this is even lower than when the price was at $64,000, which means there's a massive, a massive move just to get back to, we should technically, based on this data, be above $64,000 now. So that's a supply squeeze to come. There's not many Bitcoins on exchanges. There's not many Bitcoins to buy and sell, and therefore you end up with a supply squeeze. This is just one example of many different on-chain data. For example, we can see that pretty much everybody is stacking Bitcoin, particularly when the price goes down. So it's all been accumulating into strong hands, and everybody is set and waiting for the end of this year. The on-chain metrics look similar to a combination of 2013 and 2017. Very clear that we're in the bull market. Reason number 3 and 4 are just mentioned in this post from Pentoshi, who's a good follow, especially if you like trading. And I'm just using this tweet to talk about them. So he's talking about the ETFs. We have US Bitcoin ETFs likely to be coming in October or November. That's going to mean a massive amount of institutions, pension funds who couldn't access Bitcoin before will be able to start buying Bitcoin. If that happens, it will be huge. And in Q3 disclosures, we can see from the on-chain data that there are some big amounts of Bitcoin being taken off of exchanges over the past 4 months. And we're expecting big institutions to start announcing that they hodl Bitcoin. Who's going to be the next Tesla or MicroStrategy? I think we're going to see some really interesting announcements very soon. Of course, they will want to announce it when the price is high, because they'll be buying as much as possible right now while the price is low. So that's reason 3 and reason 4. And reason 5 is what we always talk about, what the Bitcoin playbook is revolved around, and that is the fact that we are following the halving model. This is chart from Charts BTC. The white line is the price in this cycle. The blue and reds, the previous 2 cycles. I started talking about this when there was no white line, and my target was based around the price action from 2017. Came with a target of $296,000. And since then, the white line has appeared, the price of this cycle. And of course, for the first half of this bull market, we were massively outperforming the last cycle, so more volatility to the upside. We've then had our mid-cycle shakeout. That was minus 54%, and it did its job. It shook a lot of people out for sure. Note that in 2017, it was minus 40%. In 2013, it was minus 75%. So we had an average of the 2 to the downside. More volatility than the last cycle to the downside. And since then, we've bounced and we've had channel 1. We're essentially caught back up with the last cycle. And now what we're expecting, based on all of the data that we've seen, is that we're entering the last 1 to 3 months of the bull market. And we know in that time, based on what happened in 2017 and 2013, that is our parabolic blow off top. This is not, I always try not to give my opinion, but rather just show the data. And if I'm being objective and looking at the data, we've had more volatility to the upside in the last cycle, more volatility to the downside. And the way that the market works, the oscillation, means that I'm now expecting more volatility than 2017 to the upside. It probably gives us some sort of average of the previous 2 cycles. And that means a most conservative target of 270,000, because that would be in line with the last cycle. And then from then on, you're looking anywhere up to the 2013 cycle, which went up to about 800,000 to 900,000 on a relative basis. Certainly not expecting us to go that high, but somewhere between the 2 is our target. Everything is lining up perfectly. The dominoes continue to fall, and we are perfectly positioned to enjoy the journey. So thank you for supporting. Please like the video, and I'll talk to you soon.